Hello. Hey, now, so let's talk a little bit. Well, we're going to be talking a lot more anyway. So, I had somebody ask me this question. Mike, what the heck is private lending or private funding? You keep talking about it, but I don't know what it is. So, and he went on to say, well, I don't know any rich people. I just don't know any millionaires and billionaires, as I like to say. I got that from that one politician. By the way, don't that politicians suck and lie? But anyways, I have no idea why I said that. But to be truthful, most private lenders, I'm going to say something that may shock you, are not wealthy. They're not rich people. In fact, most private lenders are simply folks that have accumulated a few bucks. It may only be 10, 15, 20, 30, 50,000 dollars. Now, they may have $250,000, 300,000, $500,000. I don't know. But most of the time, they're not rich folks. They're just everyday working class people that have been working for a while and they've saved up some money. And here's another thing. They know this. They want to get a higher return on their money because they're not stupid people. We all want to get a higher return, right? But we also want safety. You see, the stock market, is that safe? Heck no. You can put your money in a stock, and we all get excited about those stories where the guy bought a stock for $2 and it went to 10 bazillion and now he's filthy rich. Great. But for every story like that, there's a lot more stories where the guy put his money in the stock market and went down, or he barely broke even, or he got it out in time, or he's down 30% for the year. What private lending is, it's somebody who usually funds a couple types of deals. One, they'll fund the entire deal for me, or maybe I've got a creative deal going where, let's say somebody's behind in payments, maybe 3 or 4 payments behind, plus the house needs new carpet, smells like cannabis or something, and we just need enough money to give them moving money, get them out of the house, get it freshened, catch up the payments, move on. Maybe we only need, I don't know, $10,000, $12,000, $15,000. Maybe we need $26,482. And of course, I'm just making examples. But what happens is we have a private lender put up the money. This is where they step in, they become the bank. Now, here's what protects a private lender. First of all, we sign a promissory note. What is a promissory note? It's an instrument or a document that basically says, and it's signed in front of a notary, that here's the terms, here's how I'm going to pay you back, here's when I'm going to pay you back, here's the interest rate, here's the payments, on and on. It gives the terms of my promise to pay, right? Second of all, I'm also going to sign a mortgage, and a mortgage is going to get recorded at the courthouse. The title company is going to prepare it, and what the mortgage basically says is, hey, I cannot sell the property unless I pay them off in full. That's their protection. Thirdly, I'm also going to name them as insured on the insurance policy. What for? Well, if we have a fire or a tornado or some other disaster, what happens is they get made whole. So, now here's what's great about that. With my private lender, a lot of times, I'm actually going to pay them 7 and 8 and maybe 9%. Now think about that. That's a guaranteed return with fixed rate, guaranteed by safety of the property's never going away, correct? Now, can they get that guaranteed, say, 8 or 9% or whatever at the stock market? Probably not. What about mutual fund companies? Probably not, because the market goes up and the market goes down. The market goes up and the market goes down. But the trend is always, you don't know. I mean, over time, they probably do well. Well, here's what's nice about funding a deal with us. If we put your money in, there's a couple ways to do it. We can put your money in. We're short-term. Short-term meaning we're going to buy the house, we're going to flip it, and we're going to resell it in 6 or 8 months, and they get all their money back plus their interest. Another thing we like to do, and this is one of my favorites, where we have you go a little bit of a longer term, say 3 to 5 years. Now, here's what's cool about that. We'll lock in your rate for 3 to 5 years, and we let that baby grow. And we literally, you get a payment, we set you up where you get a payment every month or every quarter, and it comes, and then we resell the house on terms, and we take the payment that we collect from our new buyer, and then we pay you back as our private lender. So that's basically what private lending is. Now, do they have to be rich people again? No. Where does it work at? About anywhere. Why? Now, because anytime there's people that have houses and need housing, it's going to work, right? So, hey, this is Mike. I just wanted to give you a short video on, by the way, with American House, guys, I just want to give you a short video on a definition of what private lending is. So, hey, I'm at this house here I'm supposed to look at, so I will talk to you soon.